Well, we got a surprise rate cut this week, but that was in China. The stock market, very unforgiving. You better not miss earnings. Commercial real estate market is going through such a huge change, it's most likely going to actually end up impacting our workforce. And even though we are definitely in a buyer's market when it comes to real estate, housing starts are once again at a 17-month low, so the value of your house is most likely safe. Welcome back to This Week in Mortgage, everybody. My name is Sam Battagna, your mortgage broker here at Guaranteed Rate in Beverly Hills. I hope you're having a great week. All right, well, our friends over in China did do a surprise rate cut earlier this week. I'm still trying to figure out what it means, but these are the questions I'm asking myself. Number one, are we no longer in a global economy? Usually, when we sneeze, they catch a cold, and vice versa. We're raising rates, they're cutting rates. What's up with that? Number two, does it not matter to China anymore to be in sync with the U.S. economy as much because of all of the other investments China is making globally to create their own consumer base outside of their country? Is the U.S. not as important as we used to be to them? Or, number three, is this the opening salvo of some type of economic war? We'll see. Number four, is this retaliation against some of our lawmakers going to visit that part of the world? I'd say uninvited and mostly unwelcome. But one thing is clear as day. China is in definite growth mode. Their foot is on the gas, and it looks like what they want to be is the number one economy in the world. As we are trying to shrink our economy, they are clearly trying to grow theirs. All right, moving on to our stock market. Very unforgiving stock market. You better make your numbers, or the stock market will punish you and your shareholders. A couple notes on this. Some of the excuses some of these companies are making are actually laughable. They should probably, during their earnings calls, get a mirror out and start talking about themselves and their poor management rather than the environment out there, because if they really are in charge, they probably should have seen this coming. People on TV, I also find this laughable, still debating a recession. I think everybody needs to move on, as no one is able to actually define it at this point, because technically speaking, we are in a recession. And these wealth funds on Wall Street, they really need to start owning up to it. They are actually also blaming these factors that some of these companies are using as poor excuses as why they lost their clients' money. I would say they should just own up to it and admit that they're no better than a monkey throwing darts at a board in an up market, and some darts hitting in better places. But in all reality, no one controls the market. No one knows what's going to happen. And when you think you do, that's when the market's going to go against you. It's probably time for these wealth funds to start admitting they know no more than your average person or monkey throwing a dart at a board. But one thing is for sure, the Federal Reserve does like to be in control of all of our markets, stock and bond. They did talk the stock market down and the bond market up yesterday. This was not a traditional trial balloon. This was a planned trial balloon when they released the minutes from their last Federal Reserve meeting. Moving on, commercial real estate market. I barely ever talk about this, but it's going to make a big change in our society. So I recently saw a stat that about 60% of our workforce that's full-time is now not working in an office anymore. This is a very interesting shift. So here's my question. Those folks newly entering our workforce, how are they going to actually learn? I started my career in an office with a lot of people, and I can tell you, I learned a lot through osmosis, essentially, and I'm sure many people watching this can agree on that. So now, how are these new people entering the workforce going to actually learn by seeing and by doing in real time? I guess that bridge, if everyone's going to work from home, that's going to be made up by artificial intelligence. Only problem is, the artificial intelligence will not just become the bridge between working from home and your job. It could end up being the destination. So some people, that's what we got to watch out for. And then third thing here when it comes to commercial real estate, I think that two birds can be killed with one stone, so to speak. If we go through a downturn like I'm expecting the commercial market on the retail side and on the office side especially, could we start seeing special use permits and conversion of retail and commercial office space into residential space to make up for the lack of housing? As I mentioned, housing starts are once again at a 17-month low. I would imagine in the next few years we're going to see a lot of special use permits and a lot of conversions start happening if the traditional builders don't want to pull permits and build housing. So I bet you a lot of these offices in the next 20 years are going to turn into houses. Moving on to the residential real estate market now. We've definitely swung into a buyer's market pretty quick. A couple notes here. 10-year Treasury is still under 3%. That's a signal to me that no one believes the Fed can keep going. As I mentioned, housing starts 17-month low. It's almost 2023, believe it or not. Are we going to have a repeat this decade of the previous decade of the least amount of homes built to keep up with housing demand? If so, I can tell you this, the value of your home is definitely safe, because if we don't have enough places to live, that's just going to have a natural floor in place for the value of a house. And the most important thing, and my favorite topic, the mortgage market, of course, very healthy, very liquid. People don't love the interest rates right now, but the good news is, because it's healthy, because it's liquid, and because we're going to have that continuing general shortage of supply of homes, the value of your home is definitely going to be safe. And a quick note about the real estate market right now. I think a lot of people are starting to understand you can't sell the same house at the same price when interest rates are near and hovering around 5% that you could when interest rates were near or hovering around 3%. And it looks like we're going to start seeing a lot of activity based on reality. And that is a very welcome thing when it comes to housing, especially after the last few years. Okay, everybody, that is my show for this week. I hope you enjoyed it. As always, if you have any questions about your mortgage, please don't hesitate to reach out to me. Thank you as always for watching, and have a great rest of the week.